Siemens quarterly numbers miss estimates on all fronts, as a result of which the stock is down by about 1%. It's the energy business margins which drag. Mobility and digital segments, however, see strong growth.
Vedanta announces its third interim dividend this year. The company will pay out around 17 rupees 50 paise a share, resulting in a total payout of around 6,500 crores. The record date has been fixed at 30th of November. The stock comes off the high point of the day.
The sell-off in Nykaa continues, this time after the CFO, Arvind Agarwal, has resigned from his post. This is the third big exit from the company in recent months.
ECW announces capacity expansion plans to make further inroads into the specialty chemical segment. The company will be investing more than 125 crore rupees into expansion.
And it's a subdued listing for the new player, Inox Green Energy. The stock lists at a discount of about 7% to its issue price. Sits with those kind of cuts as well.
Hello and welcome to Chartbusters. I'm Nigel D'Souza. Joining me is Mangalam Malu. Well, and we have come off the high point of the day, Mangalam, as it appeared so at the start of trade. Don't chase the opening. That was the call, and that's perfectly worked out. The question is, what do you do from here on? Well, to help us out with that call itself, we are joined by Shivangi, who joins us. Hi, Shivangi. Good morning. Good to have you in as always. What's the trade on the index as of now?
Good morning, Nigel. Good morning, Mangalam. Thank you for having me over. So we've seen, the indices are cheering at high levels. Bulls are back after a consolidation phase. If we talk about Nifty, it did open positive today, but after the opening, we are witnessing slight consolidation and slight profit booking at higher zones. So, despite a good setup, there, the index has been trading in a very dull manner from the opening zones today. The good part is that FI's long-short ratio has improved to around 70%, which is quite positive, and even the buying flows are intact and correctly seen in the market. So overall, the chart structure and the derivatives data-wise, the entire setup is quite positive, and a hold over here in the index would take it up to 18,500 zones. However, the support is crucial support is at 18,088 zones.
All right, we take that point. The bulls are back, but bears are not giving up, their stronghold upwards of 18,350 onwards. So that's something we'll be watching out for. But individual stocks, a lot of them are doing well, Shivangi, this morning. PVR, for instance, in fact, this week it's up about 3.5% currently at the highs of the morning. Bata is doing well. Chambal Fertilizer as well is among the stocks which is gaining. What do you have on your list for us?
So on my radar is first from the banking space. We've seen that the entire banking space has outperformed the broader market, and it is holding well at higher zones. From this basket, we are liking PSU banks, and all the PSU banks, including Canara Bank, SBI, Bank of Baroda, all these stocks are looking quite positive. But on my radar is Canara Bank for today. We've seen long build-up in this series so far, and it is holding well after surpassing its previous resistance of around 315 zones. So it gave a breakout, and follow-up buying can be seen thereafter, which is quite positive for the stock, and it should afloat and move up to 335 levels. As it has been making high lows from the last 6 weeks. With a stop of 315, it's a buy. My second pick would be from the defensive space, which is HAL. So the entire space is in quite a lot of momentum and building strength. This stock has specifically shown a lot of strength from the last 10 months. In fact, if we look at the yearly chart, if we've seen that this stock has given 125% return in the yearly basis. So the stock is quite positive, and we could expect a good 4 to 5% up move over here.
Good speaking to you, Shivangi. As always, thanks so much for stopping by and filling us with your view on the index as well as a range of stocks. By the way, before we move on, just pull up a few stocks. Chambal Fertilizers has moved to the high point of the day, and the volumes as well are picking up on that one. Escorts, that was down closer to 2%, taking a bit of a breather today, but that as well has cut its losses now. And PVR is moving with good momentum now. PVR has moved to the high point of the day as we speak. And from the banking pack, you have Federal Bank. That's moved pretty well. So though the markets are more or less range bound, a lot of these stocks have come off considerably from the day's low, or they've moved to the high point of the day. Well, it's a good time to move to our special segment where we get you a few ideas for profit from Money Control Pro. Nitin Agarwal of moneycontrol.com joins us to talk about a stock that he's tracking rather closely. Nitin, take it away.
So the company that I have chosen for today is Gabriel India, which is an auto ancillaries company catering majorly to two-wheeler and passenger car segment. First, let me touch upon its Q2 number. Despite industry-wide challenges, the company witnessed a healthy 11.4% Q-on-Q growth in the top line, driven by new launches in two-wheeler space, internal combustion engine, as well as the electric vehicle. EBITDA margin also expanded by around 30 basis points, primarily due to the rich product mix. There are a couple of factors that make us upbeat about the company. Firstly, on the back of superior product quality and a strong clientele, the company has established itself as a leader player in the industry. Secondly, the demand in both the passenger vehicle and two-wheeler segment are expected to recover primarily on the back of waning impact of the severe shortage of semiconductor chips. Thirdly, the replacement segment, which is around 12% of the total revenue, is expected to register a healthy growth. Another important growth driver for the company is the significant opportunity coming from the electric vehicle segment. In fact, the company has also selectively identified by the various E2-wheeler and E3-wheeler segment, including the new startups and the big players as well. Lastly, the company is currently trading at around 14 times FY24 projected earnings, which we believe is very reasonable for a company like this.
All right, with that, we'll step into a short break. Nitin, thank you for giving us that idea. On the other side, we have Maharashtra Seamless joining in to discuss their second call.
Welcome back. You're tuned into Chartbusters here on CNBC-TV18. Well, let's focus on one stock. That's Maharashtra Seamless. Remember, they reported a rather solid set of numbers, solid showing coming in from the seamless business. But to understand what's the outlook from here on, well, we're joined by Mr. Saket Jindal, the Managing Director of the company. Hi, Saket. Good morning. Thanks so much for joining in. Well,
good morning.
Oil prices have been very, very volatile. So could you give us a sense about how much of your business currently comes in from the oil and gas space, and further bifurcate that to how much comes in from PSUs, namely ONGC? Go ahead.
Right. So our oil and gas business from domestic is 25%, and ONGC is majority around 20%. So there is a good growth coming in ONGC from the sector, means for L&T subsea applications. Subsea applications, which is we got an order from L&T for that.
So 25% of your business comes in from oil and gas, of which 80% belongs to ONGC itself. We take that point on board, Saket. Exports, how are they as a percentage of your revenues? When do you see them go back to that 25-30% mark?
Right. So exports is around 25, and we can make it 35, especially in the US, and also Canada is opened up with the duties easing up. So we are in a position to gear up for Canada.
And just to clear the air, exports are a margin accretive business, right? You get better margins out there.
Right, that's true. Currently, it is higher margins.
Well, what is the differential between the domestic and exports in terms of margins?
In terms of margins, 5% higher in exports.
Okay, so that will help you all out there. One disappointment was in the ERW business for the past quarter. The margins came down sharply on Q-on-Q. Any one-offs out there?
That's right. So because of the raw material price fluctuation, and also there was some issue with the testing parameters. So that was the reason why the margins were low.
So what is the steady state margin then? And how much was that one-off impact?
Sorry?
How much was that one-off impact because of the things that you said, impacted the business there, ERW? And what is the steady state margin that one should look at?
No, like usually we have around 10% to 20% depending on the grade. The API grades have higher margins. But this was, you can say, a one-time feature which will come back into the same as earlier gradually.
Which is between 10 to 20%.
Right.
Okay. And, the acquired business, that's United Seamless, that delivered a blockbuster. Will it continue to outperform, or was it because of the product mix? Give us a sense out there. And if you want to detail an EBITDA per ton front, what should it be? We could break it down in three: Seamless, ERW, as well as the acquired asset. Go ahead.
Right. So the EBITDA per ton in Seamless is 18,000 approximately. And in the United, it was coming 25 to 30,000 recently.
Yeah. So what is the outlook? Mr. Jindal, we have the numbers for the past quarter. We're trying to understand from Seamless from 18,000, what does it go to? ERW had a one-off, and that's why it was at around 1,000 rupees. But what is the outlook out there? And the acquired asset, that's the United asset that you acquired, which was at around 30,000. What is the outlook? Go ahead.
Yeah, so for margins, ERW, I would say, would remain at 10,000 to 20,000.
Okay.
Depending on the grade. Means the higher grades would have higher margins.
Okay.
And for Seamless, say 20,000 is an average figure for margins. And for the new unit, because of more value addition in certain cylinder applications, we can get 25,000.
25,000. So from 30,000, you're saying the steady state should be around 25,000.
Yeah, a more realistic figure is that.
Right. And what about, volumes? Because I'm looking at your volume guidance for this year, 365 KMT for Seamless, 80 for ERW, TPL, which is your United States Seamless business, about 105. That's your target for this year. You are pretty much in line for Seamless and the United business. But for ERW, you've done just about 38% in the first half of this year of what you had targeted. Will you pick that up in the second half?
For which part you're talking?
ERW.
Right. So for ERW, we should pick up, and we will gear up because recently the testing procedure was taking time, and certain bottlenecks were there for hydro and for also making a double shift. So the domestic orders also, there is going to be some challenge. So we will, I think, export, or we will get from other non-government sectors also, we will get orders.
So if we look at the guidance that you had earlier given with regards to the target for the Seamless business, 365 KMT, for ERW 80 KMT, and for USTPL 105 KMT. Do you want to change this, or do you think you can maintain it, or maybe revise it upwards or downwards?
KMT means?
The 1,000. Yeah.
Right.
Yeah.
Just go again. What figures are you talking?
No, we have picked up the numbers, sir, from your presentation. You have given us your guidance target. So we want to know whether or not will you supersede that? Will you be able to exceed it?
Well, I think we will meet the targets, most probably, on target.
Okay, got it. The other couple of questions that we have for you is your promoter holding. You have consistently been buying. If I look at it from the Q1 of FY22 till date, your promoter holding has gone from around 63% to around 67%. Do you want to take it to higher levels? It clearly indicates that you're optimistic on business. But is there a target holding? Yeah.
We were planning creeping acquisitions to increase our promoter holding. And whenever the time is ripe and the market is, apt to buy, then we can increase also.
And what is your end game here? Are you looking to, at some point, take it all the way up to 75%?
Gradually, means it will take time, I think.
No, but is that your intention, sir? That's what we're trying to understand.
That's right. That's right. We have intention to increase.
To increase from 67% to 75%.
Means gradually. Means we cannot commit so much right now. But that is the general intention.
And you have cash of 334 odd crores in your books. Any plans with that? Is there capex, or you want to return it to shareholders? Maybe one of the ways you can increase your shareholding is by doing a buyback and promoters not participating in it. Just wanted to understand. You are sitting on cash.
Earlier, we were discussing between buyback and creeping, so we decided that creeping acquisition is a better option. So later on, depending on the government taxation policy, we will again review next year and decide.
And until then, the cash sits on your books, or does some of it also come back to...
We are looking at options to invest if we get opportunities. So wherever we get opportunity to invest, even if it's a diversification or related business, so we will keep our options open.
Okay, all right. Okay, all right. I just want to clarify, I recall post your numbers, there was a matter that was relating to a subdivision of equity shares that was not approved. And on that day, the stock cracked. You want to tell us why that happened?
No, I think the idea was we announced a bonus issue where we are doing a 1:1 bonus.
Yes.
So it's not a split, it's a bonus issue which was decided, which
Yes.
is on track, means expected.
Yeah, but it had a bit of a roadblock, right? Around a month or so ago, post your numbers. The numbers were good, but the stock fell down. So the assumption was maybe it wasn't approved at that time. So that's why, the stock cracked. You want to clarify on that?
Yeah, maybe it was some hitch or some misunderstanding, but I think otherwise it's on track. There is no ifs and buts now.
Okay, all right. Mr. Jindal, thanks so much for stopping by and filling us in with all of those details. Wishing you all the best and looking forward to chatting up with you at the end of your Q3 numbers as well. Stock more or less flattish, but from the lows of this year, it's seen a very, very good recovery. So you pull up a one-year chart or so, you'll see that one has seen a good rally. Promoters saying that their intent is to increase stake, but they'll have to keep an eye out on the pricing as well, up 60% in the last 1 year. Well, we'll slip into a short break, but a quick programming note: to fully commit to the cause of bridging the gender parity gap at the workforce, CNBC-TV18 is all set to lead charge with one-of-a-kind mega initiative, Future Female Forward, the Women's Collective. Presented by HSBC, the initiative will officially be launched through an exclusive on-ground event on Friday, November 25th, in the presence of Shireen Ban, Managing Director, CNBC-TV18, Mr. Hitendra Dave of HSBC, and other women leaders of India Inc. Also in attendance will be some of the most influential voices from the business, entrepreneurship, and entertainment spaces. Don't forget to tune in to CNBC-TV18 on Friday, November 25th at 5:30 p.m.
Holding well in the green for the individual stocks as well as individual indices, though off highs. But one stock which is doing well is Maruti after brokerage house UBS issues a buy call with a target price of 12,000 rupees a share. Sonia joins us to tell us more.
Well, thanks a lot for that. So as you rightly pointed out, UBS has put out a report. They have a buy call on Maruti with a rather aggressive target price. Target price of 12,000 is what they're looking at. Now, the main rationale behind this is they say that Maruti is the biggest winner as the diesel segment derails. Now, the reason for that is there are more stringent norms expected for the diesel segment. The real-world driving emission norms will go live from April of 2023. And once these stringent norms come through, then the relative cost of owning a diesel car will be much higher than perhaps owning a petrol car in India. Diesel now accounts for 33% in demand ex of Maruti, and Maruti has close to zero exposure in the diesel segment. So the shift away from diesel as these new stringent norms comes through will be a big positive for Maruti, and hence UBS is very optimistic with a price target of 12,000. Back to you.
Okay, all right. Thanks a lot for that, Sonia. By the way, just keep an eye on the bottom of your screen. The promoter entity of ACC, they had pledged a large amount of their holding, just I think around a couple of months or so ago. Now, that's come down substantially, so ACC should come up for you on the screen. The promoter entity, the pledge coming down, that's normally some bit of good news as well, though business is something that we'll track very closely, Mangalam.
Yes, we will. And in the meanwhile, I'll just keep an eye out on Nykaa as well, because, when it rains, bad news, it really pours for them. And this time around, it's in the form of their CFO resigning. That's Paytm. We're talking about Nykaa here, down almost 2.5%. The CFO resignation has come on the back of two large resignations that took place in the last couple of months as well. Remember, Sanjay Suri, who was the Chief Technical Officer, actually resigned with effect from November 1. And earlier in August, we had the CEO of their private label, FSN Brands, Reena Chhabra, resigning as well. Both, Sanjay Suri and Reena Chhabra had been with the company for the last 5 or 6 odd years. So that doesn't bode well, especially in light of the fact that the stock has already corrected about 50% this year, down 60% from its post-listing high. And there has been a massive selling in the counter-post. Bonus shares have been credited, in fact, not just by individual investors perhaps, but a lot of these funds as well. TPG, Lighthouse India, they've been exiting their holdings in the counter in the last few trading sessions. So on the heels of that, the CFO resignation does not bode well. The stock lower. But
okay, all right, Mangalam. Well, before we wind down then, just quick update on the index. We almost moved into the red, but you have recovered a goodish bit, so that's pretty good news. But as we mentioned earlier, some of these stocks are doing a thing of their own. You have Ramco that's moved from the red into the green, so that's pretty good news. NMDC is back in the green, so that stock as well should be in focus. On the flip side, United Spirits has moved to the low point of the day, and Persistent Systems as well has taken a bit of a knock, Mangalam.
all right, we will take our viewers leave on that note, and you stay tuned to CNBC TV 18. Trading Hour comes up next.